It's Friday, the 1st of September, and it's non-farm payroll. Non-farm payrolls are, particularly in September, an interesting turning point for the market. I've seen some really big breakouts. You tend to see summer consolidation, and I've seen some really big breakouts at the start of September. I tend to think that non-farm payrolls work a little bit better when they are after the holiday, and the Labor Day holiday is on Monday. So it may be that we need to wait until the start of next week, but we're definitely in a place where we could look for some really interesting news. In terms of the numbers, I tend to think that the payrolls are a bit of a nasty lagging indicator. We found out during COVID how much they lag by. It's more than 1 month. And I also don't think that high interest rates cause unemployment or employment to soften. I think recession does. So if we start seeing that and it's 2-month-old data, then we're already in a proper recession. I'm not ruling out a pretty ugly autumn. Seasonally, if we take a look, for example, at the Nasdaq, you will see that seasonally September's the worst month of the year, and this really is the worst month of the year. It's not quite so bad for the S&P, but it is a weak month. There's a couple of markets I think are really interesting for a breakout. And in 2009, gold had a really good breakout at the start of September. If in gold, we have just made a 3-wave correction back to these weekly moving averages, we should break out of this channel, and that's what I'm looking at here. And one of the reasons is if we measure from this high to low, as you know, I'm always looking at 3-wave corrections and the relationship. We've done a pretty textbook ABC where this third swing is 61.8 of the first swing if we measure it this way. Didn't quite tag the level, but sometimes markets get a front run. And gold is pretty hot. Everyone talks about it, inflation. I'm not sure it's a great hedge, but a breakout here therefore would be quite interesting. If we stay in this channel, we see a false breakout. Third touches of trend lines are very often false breakouts. So if we get a false breakout here, I think we've got another leg lower down to this equal measured move level, and we're likely to come back to these swing lows here, which is where they add up at 1812. So pretty good decision level breakout or false breakout today and Monday in gold. Also really good decision level in oil. This is a weekly chart of US crude oil, and I don't think it's a head and shoulders pattern, but it's pretty clear support and resistance. We would get a weekly trend change if we can close above 82.75 on the weekly this week. It's a really interesting support and resistance level. It was resistance when we tested it in November a year ago, in January, and again in April. We failed to break out here when we tried it at the beginning of the month. And a close above this level, for me, points to more upside, and as well, the top of this channel in oil and a 5th wave higher. So that would be quite bullish for oil, and that would take us in US crude back to $100. Now, very often when you have an extended third wave in the middle, the first wave is equal, and so on. So I would say 84.61 might be a little bit of a wobble level, but I really do think the top of the channel and $100 is kind of where we're heading. If we take a look at Brent, have we got the same breakout going on here? In Brent, if I zoom out and we look for the highs that we made in March of 2022 to the lows that we made in March of 2023, we've been sideways, unable to get above, and we've tried a few times, unable to get above this 236 fib level, which is at 86.41. I think it closed above that. It's not quite a breakout, but it looks pretty bullish, this pullback to these weekly moving averages. So it's really kind of do or die. Are we going to fail here? If we fail here, we're going to make a bigger inverted head and shoulders pattern. When we look at the seasonal patterns for oil and gold, you can see that in September after it, we tend to see a summer pullback, July and August. And we tend to see the start of a couple of month rally in September. So it wouldn't be crazy for oil to break out and keep pushing higher. If we take a look, the same thing for gold, you can see that September Is it a huge month? Probably one of the best. Like there's a lot of other factors that feed into gold. Indian wedding season, for example, is a big one. And so a gold breakout after an ABC correction, maybe we have one more dip lower look and before we turn up again, but it would fit with the seasonal patterns for gold as well. If we take a look at the dollar, because what we really need for those kind of commodity trades to work is a weaker dollar. And if we take a look at the dollar, it tends to hold up the beginning, but September is not a great month for the dollar either. So what about the number that we're looking for then to see if we can trigger these trades? Well, the market is looking for 170,000 jobs, 169,000, 170,000, and the unemployment rate to hold at 3.5%. I think as long as we don't beat that number, and as long as it doesn't look like the economy is red hot, if the jobs numbers soft or no better than in line, then I think we are going to keep going with this kind of Goldilocks market, not too hot, not too cold. So we haven't got recession, but we haven't got raging inflation either. And that will add to the market's view that the Fed are likely to pause rate hikes and less likely a hard landing. So we kind of need a benign jobs report, not too hot, basically. So 170,000 is the jobs number. I really don't think that the number is as important as how the market reacts to this. Let's just talk about Bitcoin futures, because as you know, I really am leaning towards, this was 5 waves up for a wave 1 in Bitcoin. So the rally from the November 2022 low to the April 23 high, and this is a big 3-wave correction. And this, if it's going to finish with 5 waves, we're getting really close to one more push lower. Look, so if this was an ABC correction here, and we measure from here, the equal measured move for this 5th wave, it's not much lower than where we are. It's a retest of 25,000. It's a retest of the daily 200 moving average. That's a really big deal. And a retest of these lows from June 2023. Bitcoin, though, loves to kind of overshoot. If we were to do it this way, and we measure from this A leg high to low, project it from here, then the 1272, I think, is also quite a likely candidate. So I would say a retest of 25,000 or potentially 24,000 if Bitcoin does one of those typical overshoots. So it always, it retests the highs, it always makes a slightly higher high. Well, not always, but almost always. And when it retests the lows, it almost always makes a slightly lower low before we turn. You can see that in this consolidation here. So I'm still looking, even on the lower time frame, it says to me one more push lower here. So we would be 1, 2, 3. I'm looking for sideways and one more push lower. Maybe that it comes over the weekend, but if we drop down today, I would be looking for a bottoming pattern over the holiday weekend and to the start of next week. Now, no FOMO, it is a holiday weekend. We will get better opportunities next week, and it may be that we have to wait until the holiday is over for these opportunities, but that's what we're looking for. So 170,000 is kind of the key number, and the unemployment rate to hold steady at 3.5%. We want to watch out that there isn't a big jump in average hourly earnings. At the moment, it's forecast to come in at 0.3%. Last month it was 0.4%. So if it comes in at 0.4 or 0.5%, I'm afraid that will be the Fed are going to hike. That will be bearish for stocks, and it would be bullish for the US dollar, which is not so cool for commodities. Okay, I hope that's useful. I'll do a bigger update after we've got the data. Good